Good evening, everyone, and welcome. Tonight, I am super excited to be with you. My name is Scott Lurie. I am the founder of F Street, and we've got an unbelievable presentation for you. We will be mindful and respectful of your time. We intend to run through a presentation, and then we would like to have an open forum to any questions you might have about the presentation, the investment opportunity. Please put that in the chat. If you are not comfortable putting it in the chat but would like to speak to us about something later, please feel free to reach out to us. We are available and would love to speak to you. A little bit about F Street. F Street is an alternative investment firm. We focus exclusively on real estate and real estate investments, building and providing long-term wealth for our investors. That's our goal. We really focus on planting money trees. We'll talk a little bit more about that. But we're really focused on, obviously, the long-term generational cash flow, generational wealth development, and we're really excited to be here to share our newest project with you. As I said, we focus exclusively on real estate. We are in three categories. We invest in multifamily, we invest in industrial, and we have a private debt fund, a PDF, a private debt fund that focuses on lending. We do all three of these in our alternative investment platform. We've got an unbelievable portfolio management tool for you, the investor, and we hope, if you're already an investor, we hope you're really enjoying the platform. And if you're not an investor, the reporting and the accountability to you, the investor, is very important to us, and we have a very transparent way of doing it through our platform. A little bit about our team. We are a small but mighty team. This is our team. I've got Peter in the room as well as Lane in the room with us tonight. So it's great to be with a few of our team members, but we are a small and mighty team here at F Street, and we continue to work on great deals. A little bit about our current portfolio and what we've accomplished already. We've talked a little bit about Tannery Falls, which is in Sheboygan, Wisconsin. We've talked about Greenlink before. Greenlink is a deal we built in Brown Deer, Wisconsin. I'm really proud of our team. We just broke ground on Monday, moving dirt actually. So the team mobilized last Monday, and we're now officially underway construction on the project across the street from Greenlink, which is 156 units. And then we just completed Coast. Coast is 199 units on the beautiful shores of Lake Michigan here in Oak Creek, Wisconsin. And we're going to be talking a lot about Oak Creek tonight because Oak Creek, with the success we've already had at Coast, we are launching phase 2, which is Oak Creek MF2, and we're really excited about that. We do have a lot of other developments that we've worked on and completed all over the country, from Wisconsin to Mississippi to Ohio to Texas to Union Grove, Wisconsin. And we're in Albany, New York. We've got assets all over. We continue to deliver high returns for our investors, and we are really proud of the portfolio we continue to build. So a little bit about the development overview. We've got 1,155 units, $183 million of value, 2.1 million square feet of industrial at $155 million, and 615,000 square feet at $32 million of value. We're continuing to grow our portfolio every year with our 3 to 5 development deals, and we continue to work really hard here at F Street to make that happen. So how does F Street achieve results, right? We're all here for the results. We all work really hard for our money. I know that most of those that have joined us tonight have either worked really hard and are in their retirement years, or are working really hard to get to their retirement years. And how do we achieve results for you here at F Street? And the focus for us is really finding those premium properties, planting those money trees in premium assets, whether we're building those ground up or we're buying those and stabilizing them to create those premium assets. That's what our focus is, and we continue to do that extremely well. So how do we do that? We look at thousands of deals every single year. This is a true story. We are reviewing thousands of opportunities, and we really focus on the Class A developments that we can either build or we can create, right? And so when we build them, we are building ground up in areas where it's a brand new Class A development, or we are taking a non-Class A asset and making it a Class A asset. We're not looking at volume, right? We're not looking here just to churn hundreds of deals every single year. We're really looking to find the needle in the haystacks every single day that we evaluate and analyze our opportunities, and we're really picking out the deals that we know are going to be successful and really drive generational wealth, generational cash flow, and tax benefits to our investors. And then the lean team that we discussed, our lean team is very lean, but we're very nimble, we're very smart. We've got an unbelievable team here at F Street, one I'm very proud of, and one that everybody, anybody that gets to speak to us, I think will have the same takeaway. We are competent, we have a high level of sophistication in the real estate space and the alternative investments, and we really are focused on delivering results to our investors. I started this firm over 20 years ago, and when we didn't have the opportunity to be successful as we are today, but we started from the beginning, it was the investor that got me to where I am today, and I'm so grateful for the opportunity to continue to repay the investors and to give the investors above average returns, and that's something that we will always be mindful of as we continue to make investments. Strategic partnerships. Part of our ground-up development work is really focused on finding incentives driven by deals, right? We can only build multifamily development in today's world with incentives. It's simply with rising costs, it doesn't make sense to build ground up unless you have some form of incentive. And we work really hard to drive incentives with the municipalities that we're working at. So that brings us into the community collaboration. We really work with the local leaders. All of the communities that we're involved in know us by name. We talk to them on a regular basis. We have a wonderful relationship. And we then become that trusted partner, not only for the community, but also the partners that we work with, which are our vendors and our other relationships that we have built with vendors, architecture partners, environmental partners, etc. So we really create those partnerships. And then most important to it all, but not by ranking, is really that we have great financial partners with our equity investors that are repeat investors in all of what we're doing, as well as our institutional investors that are investing the long-term debt into what we're doing. So we've got an unbelievable small but mighty widget here at F Street, and something we're really proud of. So project partnership. We're talking about Oak Creek. Oak Creek, as I showed you earlier, was a development where we started with 66 acres of raw land several years ago. We had a partnership. I remember meeting with the city administrator at the time 5 years ago, outlining the vision for what is Lakeshore Commons today. I'm very proud that we've already delivered over 250 plus units to Lakeshore Commons. The property is changed so dynamically over the past 3 years. We have provided infrastructure. We've built 199 multifamily dwelling units for rent. We have 28 townhomes that are just about to be completed. We have 28 townhomes that are for sale. We just put two houses under contract this week. Momentum is really picking up at Lakeshore Commons, and we've got 48 single-family homes, of which we've completed about 21 of them, and 18 of those are occupied and owned by members of the community. So a lot's happened. Why do I tell it all to you? We have a multi-phase development here in Oak Creek, and our offering this evening is focused on Oak Creek, which is another multifamily development on the heels of our great success directly across the street. One few steps away over a road, and you're at the current development. Go the other direction, and you're at the new development. So we do have a residential community. Lakeshore Commons will be approximately 716 units total, which is for sale and for rent units. And it's supported by a $30 million TIF from the city of Oak Creek. So the city of Oak Creek has put their money where their mouth is, and they provided us with $30 million to make Lakeshore Commons happen. We've already deployed about 17 million of that, which is an infrastructure that is happening through the process of roadways, sewer, lateral lines, domestic water, utilities, internet, fiber optics, you name it. We've got an unbelievable partnership with Oak Creek, and it's great to have them as our partner. We are right next to Lake Michigan. We've got 2 access points to Lake Michigan. We're right next to Bender Park. The beautiful shores of Lake Michigan are unbelievable. I was just out there last week touring the site again, and still in awe at our beautiful shores of Lake Michigan here in Oak Creek, Wisconsin. And then a decade in the making. We've been working on this thing forever, right? The city really has worked on this thing forever. They took a brownfield site, they've cleaned it up, they've stabilized it, they've gotten a further no further action letter from the Department of Natural Resources, and now you have a site where the city of Oak Creek has taken back their lakefront. Not all communities have the vision and the power that Oak Creek had to take back the lakefront, and they've done a heck of a job, and we're really excited to be their partner. So let's talk about the community. This is the 66 acres. Here is 66 acres of development. This is the master plan. So when I say the master plan, this is what we've outlined to the city of Oak Creek as what we will envision being the Lakeshore Commons. These are under construction right now. Ivy is under construction. We are working towards finishing that construction. We are on budget. We are on time. Coast is right here. Coast is the 199 market rate apartments that I've mentioned several times this evening. It is the white paper. It is the reason. It is everything as to why you should be an investor in MF2 Summit. The reason is we have a test study right here, a case study that's already been proven. We have 199 units. We leased this up in 8 months. We are approximately 95% leased. We have an unbelievable community here. The community continues to develop as we expand towards 100%. And we are 8 months ahead of schedule from where we projected to be to where we are today. Demand to live at Lakeshore Commons is high. Fast lease up, demand to live there. We started the lease up in the middle of winter, and we were able to be successful ahead of pace. Think about that. Wisconsin has inclement weather. We do get cold here, and we were able to lease up 199 units in record time. So what are we talking about? We're talking about Summit. Summit is right here. Summit is an apartment building. It's directly across the street. It is an unbelievable opportunity for another multifamily dwelling on the amenity-rich community that's already here. Amenity-rich, I'll talk a little bit about those. Here's the clubhouse, basketball court, pickleball court, tennis court, all amenities, all accessible by the tenant base. This is a private clubhouse that's available for the for rent townhomes and the for sale townhomes and the for sale homes. That's their pool. There's another pool available over here at Coast, and we have an amenity agreement where we'll be sharing amenities. But as you think about it, there will also be an amenity-rich Summit that'll be part of what we're doing, as well as, oh yeah, when you want to go play basketball, you want to play tennis, you want to play pickleball, it's right in your neighborhood. It's right walking distance from where you are. You want to take a walk on the beautiful shores of Lake Michigan, feel free to cut through and walk down to the beautiful Lake Michigan. So I mentioned case study. Let's jump in for a minute. Okay, Coast or F Street OCLV MF1 was our first multifamily development here at the Lakeshore Commons. Okay, we had a 16-month construction cycle. During COVID, during the challenges of the world, during lockdown, during epic inflationary times of construction product and limited availability to almost anything. Lumber, everyone remember the days, lumber's impossible, you can't get appliances. People are eating the lumber and appliances apparently. We completed this on time, okay? We were on a 16-month construction schedule. Our construction partner, Stevens Construction, completed this on time with us. We are 95% leased, and we reached 95% occupancy within 8 months of completion. That is unbelievable. Demand is high to live at Lakeshore Commons. And then the project was completed under budget and exceeded leasing projections, right? Positioning F Street in an ongoing monthly distribution starting Q3 of 2024. We are in a position today where distributions are commencing. And I know that there's a lot of noise outside of F Street where distributions are paused, halted, or never started. We have always been focused on the investor, and distributions are starting, and we're very proud of that. We are ahead of schedule here, and it is an unbelievable opportunity at the MF2, which is directly across the street from Coast. So Peter's going to step in the screen here. I've got a brief, short video for you to watch while I'll ad-lib it off. But here's Peter sharing the video for you. But this is the actual video, drone footage of what was and what is now Lakeshore Commons. You're coming from the east, traveling to the west. You now can see Lake Vista Park, which is off to our right, which is where the cars are parked. And now you're starting to see Lakeshore Commons, the development. So this is Lakeshore Commons. You've got some single family homes. Now you have looking at Coast, which is 199 apartment units, which you see the two buildings. Here's another iteration of those. the views, these are real views. These are sunset views. These are the for sale townhomes. We have 2 of those under contract this week. Those are selling. These are another view of that, along with the coast in the background. We've got the beautiful shores of Lake Michigan. Please don't forget to take a look at it. This is the entranceway for one of the buildings for coast. There's another entranceway on the other side. Beautiful amenities, beautiful lake, pool, workout facility is on your right. And these are great views of what is Lakeshore Commons and the multifamily dwelling of coast. So I hope you're feeling Class A multifamily, high intent, high thought process related to design elements, high visuals as it relates to livability and desirability. This is what's getting people to lease this at a 95% lease up rate in 8 months. This is it right here. This is the club room. This is where people can hang out. This is all part of the amenities of Lakeshore Commons. Fire table outside by the pool. People are living well at Lakeshore Commons. Thank you, Peter. Gym. Yoga room. Excellent. Thank you. If anyone wanted to see that video, that'll be available for you post presentation, as well as this is being recorded and will also be available for you or any of your family or friends that have missed the opportunity to join us today. So let's talk about Summit. Let's talk about F Street OCLV MF2. This is the legal entity you would be an investor in, is F Street OCLV MF2, MF Multifamily 2, Round 2, Summit, Lakeshore Commons. So, Summit revamp. Here's what's happening. Investment opportunities, a total of $6.45 million to raise, with $3.75 million secured, leaving $3 million available for our new investors. Okay, so we've got an opportunity to raise. We will discuss this in a minute. I will explain what happened there and why and how. We're building 74 units of Class A multifamily units on Lake Michigan. Okay, prime location, Class A asset. If you want to own a Class A asset, if you want to be part of a Class A asset that is only going to get better, this is your opportunity. And then we have high investor demand. We have limited opportunity to join this well-positioned, high-performing development. We're excited to offer it. We plan to get started here in the immediate future. We're really excited about it. So the project updates. It's an 18.28% IRR based on a 4-year hold. We're planning to refinance in 24 months. Yield to cost 7.7, and the equity multiplier based on that 4-year hold is at 1.75x. Once again, refinance occurring in 24 months, and we intend to return 1/3 of the capital you invest at that time, at the 24-month point. You make an investment of $100,000 a day. At month 24, expect your 1/3 of your money back plus your preferred return. We're going to talk about the preferred return as well, but plan for it. So, phase construction. Based on the 2 phases that we're doing, which is just with 74 units, we're shorting the construction down to 12 months. There will be another phase, MF3, that will occur, which is the next building, and that will, since we were able to pare down the development, we were able to make the construction cycle almost 4 months less. And we're focused on those 74 units that will allow us to stabilize in a much faster pace. We have demand to live here. There's demand to live at Lakeshore Commons. We are going to lease this up quickly. We will be able to stabilize after month 24 and return capital sooner and increase our cash flow to the investors. So let's talk about the investors. Here we are. Class A, that's you. That's you, the investor. You're earning an 8% preferred return on your outstanding capital. Every dollar that's outstanding while we are in possession of it is earning 8% on just the money. That's a preferred return. So people get a little bit confused here, but let me understand that as we have your money, it's earning 8%. So if it's sitting in a money market right now, maybe earning 3 or 4%, you're earning 8% with us. Okay? That's just the preferred return portion that has nothing to do with the cash flow or the distributions of the proceeds. Okay? 100% So listen carefully. This is really important. 100% of all free cash flow goes to you, the investor, until you have received 100% of your investment plus 100% of your preferred return. So unique strategy. Not many people do this because people want to start taking distributions themselves. We don't touch anything. We are so aligned with you to get you your money back that we don't get $1 until you have 100% of your money back. Once you have 100% of your money back, plus 100% of your preferred return, you, the investor, the Class A, keeps 65% cash flow and sale and refinance proceeds. It's that simple. Once you've given you all of your money back, plus your preferred return, we, the GP, the general partner, shares 35% of the profits. But I don't do that until you have all of your money back plus your preferred return. All right. Our business plan. Let's talk about it. We're building 74 units of Class A mid-rise apartments on the South Building in Oak Creek. Construction's 12-month timeline. First unit's available after 12 months. Pre-leasing starts 6 months prior. So we'll start pre-leasing in 6-month phase. We're going to refinance post-stabilization at month 24. Ongoing cash flow will be monthly or quarterly cash flow distributions after stabilization, post-stabilization. Our partners. Here's who's helping us with this. Stevens Construction. Stevens Construction is an investor with their cash, not fee deferment, not anything else, their cash in the deal. Harmonic manages all of our assets. They're a wonderful partner. They do a really good job with the lease up. And our architect partner, Rinka, will be investing in this transaction as well. But as of right now, they're not investors, so I didn't want to put them as investors, but they will be investors. So here's what Beautiful Summit's going to look like. These are renderings. These are renditions. These should be pretty close to what's actually going to be delivered out of the property. We're really proud of the architectural and the interior design work that really keeps occupancy high and tenant livability longer, right? The longer someone lives there, the less friction on the property, the more community built. It's a wonderful win-win. Okay, I wanted to go back, Peter. I'm sorry for 1 second, but I just want to jump back to one thing. We have already raised on this development $3.7 million of the $6.45 million, and these are approximate numbers, okay? We're still working through some of the legalities of it, but let's say we've already raised half or thereabouts of the money. We have partners that are delivering this equity through what is called a 1031 like-kind exchange. So they are selling an asset and they're moving the funds from that asset into this asset through what is called a tenants in common relationship, a TIC, and it's a 1031. So we have two different parties, two different families that are selling assets that are moving them into this transaction and providing almost half of the equity. So what's available is a very limited amount, call it $3 million of dollars that need to be raised to complete the lift. We already have identified these parties. Their transactions, one is closed and one is closing. We already have the money moving and we're ready to put them in this transaction. So we have already vetted and already raised almost 50% of the total equity needed for the development. And that is awesome. And that is a compelling thesis to anybody else contemplating this investment to jump in. 30 investors, $100,000 each, $3 million. Tomorrow, there'll be 20 investors available because 10 will be already committed, and then there'll be only 10 remaining. So now's your time. We'd love to have you in if you wanted some questions. A little bit of what we briefly talked about, and then we'll open it up for some questions, is Village 43, F Street BD2. If any of you are investors in it, thank you. We've already broken ground. We're already under construction. We just closed on this almost a week and a half ago. Another development, which I've already ran through, which is Village 43. higher IRR, townhome, garden style apartments. We were able at the end of the transaction, right before we closed, we were able to save almost $500,000 due to what we did as a forward-looking interest rate swap. As rates came down, we executed a swap and brought back almost $500,000 to the investor pool immediately. Some more renderings, beautiful Rinka designed. And here's where it is today. So we already started the earthwork. What was here before were 2 office buildings, a bunch of piles of trees, a pretty nasty looking site. The earthwork has started. Infrastructure will be going in, and then in the short 8 months, we will already have our first tenants on the property. For those of you who are interested in our private debt fund or are already invested in it or have never heard of it, our PDF, our private debt fund, is focused on a 10% return to our investors. I started the fund with $700,000. Today we have almost $100 million in the fund. We pay 10%. Why did I do it so simply? Because either I wasn't that smart or I didn't know how to sell it to people back when I got started. I said, I will pay you 10%. And they said, wow, that's great. We still pay 10%. We pay 10% on your fund, on your money. We can either pay it current pay, which means the last business day of each month, we pay you 10%, 1/12 of 10%, or we accrue it, which is up to you at your discretion. The investment is backed by our first lien mortgage position on almost 600 assets all over the place. How does it work? Pretty simple. Invest $100,000. It's got a 1-year minimum lockup. We'll pay you $833 at the end of each month. You'll get a tax return on your portal, 1099-T, and when you want your money back, give me 90 days, please. We did just release compounding interest. As Albert Einstein said, compounding interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. It's profound. If you start looking at what could have happened when my first investor in 2009 invested in our PDF with his first 100 grand, I can only imagine. I'd love to actually do that exercise, Peter. What would Andrew have if he put 100 grand in 2009? Be an unbelievable exercise. But needless to say, compounding shows you just the difference in years of where you would be relative to if you compounded or not. We don't have a dog in the fight, meaning if you want the money, we want to pay it to you. If you want to compound it because you don't need the money today, let it roll. I mentioned earlier about 1031 exchanges. We are great executors of the 1031 exchanges. What are they? 1031, named after the Section 1031 code in the IRS, is basically a like-kind exchange. It's a tax deferral of an asset that we would roll into something else. We've done multiple 1031s for individual families or partners that are selling an asset that want to step up in basis and want us to help them. If you have a real estate and you're selling, 1031s are a wonderful way to delay the tax burden. If you have any questions about 1031s, we're happy to jump in with you and educate you or have a discussion with you on the process and how we can be of assistance to you. So we do have a 1031 tailored option, which provides passive cash flow, long-term appreciation, and portfolio diversification. So we do it all. You can be involved or not involved. Most people are not involved. Most people say, we really want to trust your expertise. And so as a result of that, we do the tailored 1031 transactions. We do about 1 to 3 of these a year where they become sizable. We had 2 great executions last year. We've done a few this year, and we've got 2 families jumping in from an exchange into MF2. So we'll help find the perfect mix. If you haven't been to fstreet.com, please go there. I encourage you. This is what our portal looks like. This is what an investor would see. If you're an investor, you can see what you've been distributed, what you've committed, where your money's invested in this portfolio of what you're invested in. Here's your distributions over time. All of your tax documents are right here. All of your transactions are here. All of your information is in your dashboard. It takes very little time to invest in your future. This is a great opportunity, and our portal really is transparent and lets you know when you wake up in the middle of the night and you say, where is my money? You go to fstreet.com and you can see every dollar and what's going on with your investments. Make this your dashboard. Okay, the last thing is we are a 506c. We register with the SEC under the Form D laws. We do require you to be an accredited investor. Accreditation is done by a third party under our 506c, which is simply you need a third party, which is usually your accountant, CPA, or an attorney who will sign off on your document, or you can provide information to them. Most people do this in 5 minutes. It's a really simple process. We have to use a third party as distinguished by the Securities and Exchange Commission. And so we register, you get accredited, we pay for the accreditation, and it's an unbelievable process. So earn your badge, it's free, costs you nothing. Come through the process. If you're not ready to invest, go through the process anyways. It doesn't cost you anything. All right, so let's invest together. I'd like to open this up to any questions that anybody might have right now. Peter will read them out and I will share them with you. So Peter, do we have any questions yet from the audience? Yep, so somebody said, I saw F Street OCLV MF2 a while ago. What's the difference? So the technical difference is we brought the project out earlier as a 2-building project. We have reduced that down to 1 building project of 74 units, and we already have committed, because of the like-kind exchange from the TIC, from the 2 parties that are coming in, we've already raised about half the equity. So with that said, the economics have also improved for the investor. It used to be a 60-40 split, now it's 65 to the investor, 35, because we had to make the math work for the investor, so the investor gets more of the deal. Other than that, that's the transaction. Same deal, same location, same thing in Oak Creek. There will be an MF3, which will be the second building that's part of the MF2. So the question is, do we have a minimum investment for a 1031 and how do I get in touch? We want to make sure that we're using your time and our dollars, your dollars and our time wisely. Talk to us, let's discuss. We can move most investors around. We don't have a minimum, meaning that, but it's hard to move a like-kind exchange for, call it under a couple $100,000 of cash value moving, but let's have a discussion and love to hear what you've done, what you've accomplished, and how we can help you. Yep. So the question is, what are the tax benefits? There's 2 questions that came in. What is the $100,000 investment valued for OCLV MF? Just the first one. So we're working on that quickly. The second question is, and if we can't do it right now, we can get back to that party if you want to give them a better breakdown. The second question is, what is the tax benefits? So we are always tax sensitive. How do the wealthy get wealthier? They don't pay tax. Think about this statement. There is tax code that allows the wealthier not to pay tax. And as a result of that, while you're paying 40% of your income to the government, they're paying 0. Yeah, so that makes sense. You're paying 40, they're paying 0. As a result of them paying 0, they get wealthier and you don't because you're paying all this tax. Very irritating. So we focus on the tax benefits to the investors. We do a cost segregation study on all of our assets when we buy them to forward depreciate losses. Okay, in the scenario under a brand new building, it's not a cost seg, it's a 179D study, but it's the same concept where we're accelerating depreciation. You have to think about depreciation and taxes a little bit differently, okay? As an investor, you are what they call a passive investor, okay? So as a passive investor, if you make a $100,000 investment, the most you can go down to in the write-off under passive is to your basis. So I can bring this down to 0 through a cost seg. I can bring that down to 0, but you can't go past that because you're a passive investor. Now, a little tax for 2 minutes. Is everyone with me? Okay, a little bit. So what I tell our investors the investors that are very sophisticated, is you need to be a passive investor for year 1, year 2, year 3. Because what happens, remember what happened in year 2 in this investment? Cash flow. So now, when you have cash flow as a passive investor, passive income offsets passive losses. And that's where the magic starts to happen. So if you did this for 10 years, if you kept going out, you would be able to take advantage of all these losses as you keep investing and growing your passive losses while your income is now brought to you tax-free due to your passive losses. So there's ways to do it. You have to be methodical, you have to be disciplined, and you have to be in the game. Don't step 1 foot in, 1 foot out. Just get in the game and be committed. Whether your investment's 50, 100, or $1 million a deal, it doesn't matter. Just be committed to that along the platform of making multiple investments every single year while you're building your world, whatever your world is. I'm a doctor, I'm a lawyer, I'm a business person, it doesn't matter. Do whatever you are. Whatever you do in the world to earn income, be a passive investor, because that's what the code allows for, and do it every single year for 10 years. But the magic starts after year 3. And then you remember, once I give you back a third of your money here, right? Take that and put it into deal 3. Now, you're planted one money tree here. Here's a money tree. Right? Here's a money tree. And now here's a money tree that's kind of on steroids. Because this money tree just grew this money tree by 1/3. Right? You just got 1/3 of your money back. Now you put in another money tree. You still own your equity. You still own this tree's still healthy. This one's still growing. And now this one starts to grow as well. I hope that made sense. Tom, you asked a great question. I want to lay it out for you because it gets a little complicated once infinite returns and cash flow starts playing into what does the $100,000 look like. The short answer is I'm going to send you a spreadsheet that answers your question. If anyone else has that question, we'll send it out to everybody as well. The question is, what does the cash flow and rate of returns look like on a $100,000 investment? And so I want to get you that. It's hard for me to show you Lane's computer because it's not connected here, but Lane's sitting here. We will send you that, Tom. Thank you for the question. I really appreciate it. And we will get you that shortly. That'll explain everything you've discussed or asked for. Where are we? Yeah. So our minimum investment for this deal is $50,000. The maximum is $3 million. So we get investors that invest 50, and then we get investors that invest $1 million. And those people do consistent through all the deals. BD2, BD1, BD2, MF1. We have the same investor put $2.5 million in every one of those deals. We have investors that put in 50 and 100. Here's what I tell people, and I mean this the most. When I tell you that invest with confidence with money that lets you still sleep. Okay, I don't want you to be up, well, I'm building your building, worrying about this money as your last dollars. That's not efficient for anybody. Investing, while it's supposed to be fun, is also a material way to benefit your life and to make you generationally wealthy and generational cash flow. So invest what you want to invest. I'd love to tell you that I want you to invest $3 million. I understand if you want to invest 50. We are grateful for your trust and confidence for any dollar you choose to invest with us. So my first investor invested $50,000. Now he's at $7 million. I didn't have to call him and say, hey, I'd really like you to invest more money. Organically, as he continued to build trust and confidence, he kept investing, and now he's got $7 million. So minimum 50, come in for what you're comfortable with. We've got about $3 million and change to raise on MF2. We're excited to get in the ground. We want you to be part of it. Are we live? The question is, do we have a cost per unit breakdown? $248,000 per unit.
When will the next phase of Summit start?
Phase 2 or phase 3?
North, so phase 3.
Phase 3 will start sometime, probably summer of next year is my guess. So the question is, when will phase 3 start? Sometime summer of next year is the goal. All right, everybody, I think we did it. I hope my money tree planting all gets water. I'm grateful to have you here this evening. I know your time's valuable, and I appreciate your consideration of an investment with F Street and MF2. Our team is working really hard to deliver above average returns, and we're really proud of what we're doing. Thank you for your trust and confidence and even being here tonight. We're going to stick around for about a couple more minutes. If we have any other questions rolling in, Peter, seems like we have one more. And then we will, just so everyone understands, we will be sharing this presentation with you. Once it's uploaded, we will answer Tom's question, which we will also send to everybody. It seems like multiple people were asking for it, so I want to get that out to the group. And if you have any other questions, my name is Scott Lurie. I'm at scott@fstreet.com. Our investor relations team, as well as myself, is accessible all the time. So let's talk. The question was, is the tax benefits passive or active? So I'm assuming, this is the assumption, that everybody's passive investors. So as a passive investor, the tax benefits come back to you, but are limited to your basis, right? So if you make $100,000, your basis is what you're limited to. That's all that happens. So if you are active for some reason, which would mean you're signing on our notes or you're involved in the development, you could become active under the code. The code is very complicated, and it requires over 750 hours, but it has to be more hours than what you're doing with your other job, whatever that is. So the watermark is very difficult. That being said, to answer your question, we are discussing specifically passive under what would be the 179D, or cost segregation study. Yep. All right, guys, thank you. From the bottom of my heart, your time means a lot to us, and you've spent it here with me for the last hour. I'm grateful for your time. I also appreciate you considering F Street. When we came to the world with F Street, I wanted to deliver above market returns in alternative investments, specifically in real estate. And I'm very proud of the team that I have built and our team is built over here at F Street. Thank you once again for your consideration of being an investor of ours. If you ever want to reach out, we're always available. And once again, thank you for being here with us. Thank you to my team for helping me preparing for this evening. And I hope to see you guys soon. Thank you.